G'day there, Investorholics. Welcome back to another ETF Spotlight review. Today we'll be taking a look at emerging markets products. And the product today is IEM, which is the iShares MSCI Emerging Markets ETF. Now, this one will be good for you if you have a view on emerging markets. I suppose it's another way to invest counter-cyclical. This product might be appropriate for investors looking for capital growth. Obviously, a product like anything to do with emerging markets is high risk and potentially high return, but like I say, it's a bit counter-cyclical and you have to be careful where you get into these type of things. So if you're interested in emerging markets, learning a bit more, hang around and we'll see what we can teach you guys. Hey there, Investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your personal finances, expand your investment horizons, crack your financial sky. Don't be afraid to hit the subscribe and the like, especially the like. Even if you don't subscribe, hitting the like is always very, very helpful. Thank you very much. Okay, let's dive on in. So investment objective, the fund aims to provide investors with the performance of the MSCI Emerging Markets Index before the fees and expenses. The index is designed to measure the equity market performance in the global emerging markets. So the MSCI Emerging Markets Index captures large and mid cap, representing across 27 emerging markets. With 1,417 constituents, the index covers approximately 85% of the free float adjusted market capitalization of each country. So you're obviously getting a good look at a lot of those emerging markets. As always, we have to look at the Y factor. Another one here. IEM gives us exposure to emerging markets. Obviously, it's emerging markets ETF. It gives you exposure to 800 emerging market companies in a single fund. And lastly here, it gives you international diversification. As long as you're sort of looking for a long-term growth opportunity, this one definitely isn't a short-term proposition. Like I say, you've got to be careful where you get in and out of these ones because, I think it's just a little bit more tricky, emerging markets. Okay, let's take a look here. We had a net asset value of $67.87, trading just above that at $69.91. Market cap of just under $1 billion, 984,400,000. Management cost of 0.68%, sort of pushing towards the high cost. We have a distribution semi-annually in January and July. Dividend yield is about 1.5%. So this ETF offers, as I say, it's offered at a price of 0.68%, one of the lowest. I think it's, I'm not sure if it's, I suppose when you look at it in relation to the other EM ETFs, it's sort of, I suppose it's in line, with what the rest of them are charging. So the portfolio effectively captures most of the opportunities set available to its actively managed competitors in the emerging markets category. It selects compositions close to the category average, with financial and technology stocks representing the largest in the sector. The top 5 countries are China, Taiwan, South Korea, India, and Brazil. and they account for 76% of the companies held in the ETF. So, you know, quite potentially IEM offers an appealing alternative to low cost and minimal maintenance options that are delivered over multiple market cycles. Yeah, I mean, like I say, I think it's one of those ones you kind of got to be in and out quick, or you got to be in for the long haul anyway. So, like as I just described, over multiple market cycles, the portfolio reasonably diversified stock specific risk. So, you know, I always see these emerging markets sort of ETFs or companies as higher risk regardless anyway. And that should mitigate the impact of the worst performing companies in the ETF. Holds over 1,200 companies, and the top 10 positions account for 26% of its net assets or its assets. Akin to any global emerging markets portfolio, Chinese equities dominance is inevitable here as well. So we'll have a look at percentages over the next page, but definitely dominant holdings country-wise anyway. Okay, so obviously here we're looking at Taiwan Semi, Tencent, Alibaba, Samsung, Meituan, whoever that is, never heard of them, Meituan, Reliance Industries, Infosois, however you want to pronounce that, and then it also holds another underlying ETF by the look of it to round out the holdings. And then you got cash component as well, money market component. Then you got JD comes in at number 10. So since the inception in 2003, you would have had a cumulative return of 415%. I suppose over that time it doesn't sound too bad, but when you break it down, you're looking at 8.97% since inception. You know, I mean, I like to see, you know, you're trying to get a 10% return on these things, but, you know, 8.97% isn't too bad in the scheme of things, but not the best either. So, alternatives on the other page, you know, VGE is something you should probably look at as well. So, IEM struggled against many of its peers over the past decade. It marginally matched the category average over the trailing 10 years through to May 2021. That was particularly due to relatively low fees. Emerging markets also lagged many developed markets over the same stretch or same period. So the fund underperformed the MSCI World Index by 7.2% percentage points per year, but managed to provide a few short periods of solid performance. So let's have a look at the breakdown here. So China takes up 34% of the index, Taiwan 14, almost 15%. So I mean, you can almost put China and Taiwan together. India 12%, South Korea 11%, almost 12%, and Brazil pretty much the only non-Asian country in the top 5 there at 3.92%. So yeah, for mine, you know, I think there might be better option. You know, I think IEM and VGE are probably the two best options in this space that I could see anyway. They're the two biggest ones, and economies of scale is going to keep your costs down. So, you know, your management costs are going to be lower. So, yeah, I definitely do some more research. If you're interested in this space, check out VGE, and there's also a couple of other options back on the previous slide that I forgot to mention. So anyway, yeah, worth having a bit more of a look at if you are interested in emerging markets. Like I say, I mean, it's something, you know, probably need a bit of exposure to. Yeah, and yeah, I think the best way to get it is either through VGE or IEM. So yeah, take your time, do your research, and hopefully this was bit of information and valuable. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.